I'm now going to demonstrate an example of using the trending indicators to go long. The example I'm using is the euro dollar as it was trading on October 1st, 2010 at 9:15 a.m. at a price of 1.3681. The basis of trading Forex for quick profits is to view the currency and the indicators in 3 periods. And to do this, one uses a live feed, putting the data into the program as the Forex trades. The CycleTrends live program gives the trader the option of using 2 feeds, either the ShareNet live feed or the eSignal feed. So the first thing we are going to do is to analyze the euro dollar in 3 periods. We tile these periods side by side so that we can examine the indicators at the same time in the 3 periods. And the graph shows them from left to right, the 10, 15 and 60-minute periods. So here we have the euro dollar at 9:15 a.m. on the 1st of October 2010, and it has been tiled to show 3 periods. On the left side here we have the 10-minute period, in the middle the 50-minute period, then the 60-minute period. The data is coming in live as the euro dollar trades, and so we can use the indicators, analyze the indicators at the same time, and at this point at 9:15 a.m. on the 1st of October. Now the logic of using 3 time periods is that if the indicators, and in this case the trendings, are giving the same signal in 3 periods, then that signal has more than a 70% chance of being correct. So in these 3 periods, as I showed you in the example, we have 5 boxes, and in each period we would have the price line in the first box, then the cycle box, then the overbought oversold indicator in the 3rd box, and in the 4th and 5th box the very important trending indicators. In the 60-minute period here we have duplicated the trending 55, so there are 6 boxes. So if you look at the 15-minute period, we have the same 5 boxes: price box, cycle box, overbought oversold indicator, and the 2 trendings, trending 36 and trending 55, and the same in the 60-minute period. Now the euro dollar is trading at 1.3681, and in the price box we draw a resistance line. The euro dollar is actually coming up against the resistance line, and the question is, will this resistance line be penetrated? If so, we will go long. You can see 1.3681, the resistance line. It shows up very well in the 10-minute, but we have the same thing in the 15-minute and the same in the 60-minute. And we are going to use these indicators here to decide whether to go long as the resistance line is penetrated. Now, when trading Forex for quick profits, the primary focus is firstly always on the trending indicators, which you see in box 4 and 5. This is the first move you make. The first thing you actually do is look at what the trending indicators are doing. For you to go long, to make a decision to go long, the trending indicators, that is trending 36 and trending 55, the 2 must be moving up into the positive zone to show that the immediate trend is upwards. So here in the 10-minute period, it has moved up into the positive zone. In the 15-minute period, it has moved up, the trending has moved up from negative through 0 to positive in both 36 and 2055. They are in the positive zone, and the same as can be seen in the 60-minute period here, that the trendings have moved up into the positive zone in both the 55 and 36 trending period speeds. We call them speeds. So let me make my point again. When you're trading Forex for quick profits, the first thing you look at the trendings, and if you want to go long, the trending in all three periods, 10, 15 and 60-minute period, must have moved up into the positive zone, telling you that the immediate trend in all three periods is upwards, and if so, you would have a 70% chance of being correct in your trade. So, as in all three periods, the trending 36 and 55 speeds are in the positive zone. This is already telling you a signal to go long, provided the signal is supported by the cycle and true OBOS indicators. So though the trendings are the most important indicator for telling you to either go long or short, they have got to be supported by the cycles. And we look at the 10-minute period here, and we've got to say to ourselves, is the cycle moving upwards in line with the immediate trend of the trendings? And as you can see here at point A here, this is in fact occurring. And the same thing applies in the 15-minute period here, that the cycle is moving upwards. The direction is upwards in line with the trending direction. And actually, in this case, in the 60-minute period, the same thing is happening, but I've got to have a corollary here that the cycle direction in the 60-minute period is not that important. If it is going downwards, as long as the cycles in the 15 and 10-minute periods are moving upwards, that would be proof enough that the immediate trend is upwards. As I explained before, the importance of the true OBOS indicator relates to whether the currency is at an overbought or oversold level. If we are going long, the currency in the first place must not be at or near the overbought level in any of the periods. This would limit the upside potential rise of the currency. We would like the currency to be either near the oversold line or at least at the zero line. And if we examine the overbought oversold indicators here, you can see that in the 10-minute period it is at the zero level, same in the 15-minute period, and the same actually in the 60-minute period. So you can say that the overbought oversold indicators here are here at the zero level, which is neutral, but from this level actually it can be a springboard for an upward move. So in conclusion, based on the fact that the trending indicators are in the positive zone, that the immediate trend is all upwards in all three periods, and the cycles and the true OBOS indicators are confirming, the trader's decision now is to go long on the euro dollar at 1.3681. And the final move to get the exact price entry point on the trading platform can be obtained by using the breakout trading method. This is not shown here, but this, if I can describe it briefly here, we would draw a resistance line here, which we've done with our trend line cursor. It connects the tops of the price, and as the price penetrates the resistance line, that level is put on the trading platform. As I say, the technique is not shown here, but it would be to change the price line here from close line to candles. And I show this again, or I show this in the next example when we go short. Now I'm following up the trade that we showed you previously. This is a follow-up of the long trade in the euro dollar on the 1st of October, and this graph now was taken at 11 p.m. on the same day. And in the same way, we can show you, we do the same thing as we showed you previously. we have 5 boxes: box 1, box 2, box 3, 4 and 5. The cycles in the box 2, OBS in box 3, Trendix in box 4 and 5, and we have the same 3 periods. In this case, we're having the 10-minute period on the left side, the 60-minute period on the right side, in the center, and 15-minute period on the right side. Now, what do we see? We see the following. Here we have in box 1 in the 10-minute period. Remember, we went long as the resistance line was penetrated at 1.3681. It went through here, and at 11 p.m. it had already risen to 1.3789 to give the trader a substantial profit. Now we see some significant changes already taking place, which tells us to start taking or to take profits. So why are these indicators telling us to take profits? As I showed you before, your first focus always in trading Forex is to look at the Trendix. And look at the Trendix in the 3 periods. So over here we have in the 10-minute period, we see that the Trendix are still in the positive zone, that the immediate trend is still positive, but you can see that a change is taking place in Trending 36, in that it is now moving from the positive, it's approaching 0, and it is going to move into the negative very shortly. And if one looks at the 15-minute period over here, you can see the same thing happening in Trending 55. Trending 55 is moving already from the positive. It is touching the 0, and it is about to move into the negative zone. So it's telling you that the immediate trend is going to change very shortly to negative. And if you look at the cycles here to corroborate what the Trendix are showing, you can see the cycles here in box 2 in the 10-minute period. The cycle, as I showed you before in the example before we decided to go long, that the cycles were moving upwards, and you can see quite clearly now in the future zone that the cycle is now pointing in a downward direction, and in the 15-minute period over here, same thing can be seen, downward direction. So when you put that together, the cycle's moving downwards and the Trendix about to move into from the positive to the negative, it's telling the trader to take profits at this point at 1.3789. So at 1.3789, I'll say again, it gave the trader a 108 pip profit at 11 p.m. on that same day. But in actual fact, the trader did take another profit, an earlier profit at 12 noon at the 1.374, because the price reached this level of resistance here, and he took a 60 pip profit here. So in summary, to trade Forex for quick profits, the first thing you do is you tile your graph into 3 periods, 10-minute, 15-minute and 60-minute period. You have 5 indicators, or should I say, sorry, 5 boxes with 3 indicators, and the most important indicator is the trending indicator. The trending indicator shows the immediate trend, and if you want to go long, the trend as shown by the trending indicators, trending 36 and 55, and all 3 periods must be pointing in an upward direction. And we're now going to follow this up by showing you the technique for going short on the pound dollar.